commercial bank stocks have steadily appreciated over the last 2 days after news that Parliament had lifted caps on commercial bank lending rates. While the move has increased investor appetite in banking, borrowers have been left jittery. The chairman of the Kenya Bankers Association says there is no risk of a spike in lending rates.
If you look at the business environment today, banks have reached a new business model. So if I'm able to lend to a current customer at 13%, I've accepted his risk profile. So the whole industry, and like us KCB, that will not change the next day. So the fear that there's a massive repricing the next day, banks are waiting to just go in and disrupt and rupture the market. Is actually not true.
And to help break down for us what all of this means is Muathi Kilonzo. He is in charge of equity sales for EFG Hermes in Kenya. Thank you very much for joining us tonight.
Thank you.
So we've heard from the chairman of the Kenya Bankers Association saying that these hikes will not take effect immediately. But how soon should we expect them to?
So there is a process, and the process is from today, you probably have around 35 days. So that's 7 days for the bill to be presented to the president, 7 days for him to sign, 7 days for it to be gazetted, another 14 days after that for it to be enacted. So that's kind of the legal side and the process side. Now, obviously, every bank is different, and every bank is in a different situation. But I think once the banks are allowed to start pricing risk, which is essentially what they haven't been able to do with rate caps, then you start to see them start to filter borrowers. So if someone has a high risk, then they should get a higher interest rate. If someone is a low risk, so if you're already borrowing at 13%, it means in any case you are a good credit. So there's no reason why you shouldn't continue receiving credit at that price or at a low price. And that's what I think Joshua was saying, is that, you know, if you're already at 13%, there's no reason why in 35 days' time that you go to 20%. And I think also in that statement, they mentioned that the economy has changed. I think from 3 years ago when interest rate caps were put in place, the macro picture isn't as good, the economy isn't as good, and you've started to see politicians actually start to say that things are not as good as we thought. And anecdotally, we all knew. We all have friends, we all have colleagues, we all have people who have complained. The problem is that the GDP numbers have always been flattered by big infrastructure projects. But if a railway is built and you live in Mandera, then there's very little benefit for you in the short term, perhaps in the longer term if goods are cheaper to come in. So I think these are some of the effects, and I can't speak for how long it would take to reprice. But what we also know is some of the larger banks, anticipating this move, had moved a lot of their bond portfolios into the short term. So this will start unwinding. So let's give it a year for some of those T-bills to start unwinding. Then you should see some of the larger ones start to increase their participation in the credit market. So I think it's positive.
Okay, so there's obviously a lot of jitters amongst consumers because of this news. Are we looking at a scenario such as what we saw way back when interest rates were as high as 20%? Yeah, is that what we're looking at?
You know, it's a good question, and I can understand why people are nervous. And to answer that question, you'd need to really break it down into, there is the micro, which is yourself as an individual. You're scared that your credit may go up. However, there's a lot of people who always thought that credit was cheap. But when they went to the bank, they never got credit. So there was a kind of this idea that I could get credit, but actually you were shut out of the market. Then the second fact is the macro picture. If you look at it, if you look at public sector credit extension over the last couple of years, it was a dramatic downshift. I mean, at some point, Kenya had an annual growth of maybe 20% in credit. That sunk to almost 4% at some point. And when you have such a low amount of credit growth, then people are constrained. So businesses don't have working capital, people can't import, people can't do very basic stuff to just keep their business running. And that's the biggest issue. And you can see the president has been focusing on SMEs because that's where the pain has been. You know, I think people who were good credits got credit. But for the rest of the economy, it's been very, very tough. So to answer your question, will we go back to 20% or 30%? I suspect that the banks, and the banks have said they wouldn't. The macroeconomic picture also doesn't support such high interest rates. At the same time, the central bank governor has been very, very vociferous about this, that the rate caps also neutered monetary policy. So, for example, they could never cut interest rates, the base rate, because that would force banks not to lend. But now I think what you can expect is actually for the central bank to cut interest rates, and we expect that monetary easing will come.
All right, so you mentioned yourself that quite a good number of people were actually shut out from accessing credits, and that pushed people now to the numerous mobile money lending apps that we've seen in Kenya. Some of those actually have interest rates as high as 47%. So what about them? Are we likely to see this issue being addressed?
Yeah, look, I think the governor is also of the central bank has been very clear that this is the next target. Now, I mean, I think one thing we should also set out is that interest rate caps are not such a bad thing in, you find them in other parts of the world. South Africa has them. The issue for Kenya was that they were not particularly well formulated. So they punished instead of encouraging good behavior. So I think that's the next target. Now, obviously, these apps and businesses have grown because of the people who were shut out of the official credit market. And there is also one very big concern, I think, from some of these apps is that people don't realize is that you basically give up most of your personal information on your phone. Now, if it's with one of the larger ones, which are registered or run out of the US, your data is probably protected. If it's a very local app, then basically you've given access to all your texts, all your messages, all your emails, your contacts, to someone whose database you have no idea how well protected it is. So I think there's a big issue on that side. And I think that people should always be able to be allowed to get credit at whatever price they want to pay for it. So I think there should be controls. So I think you will see something on that front. Can't speak for the timing, but it's clearly been a very profitable business for a lot of institutions. But that will come under control.
All right, so now we've seen borrowing liberalized. What are the trickle-down benefits to the economy, and how soon should we see them?
Look, I think as I mentioned earlier, you have to look at the bond market. And what had happened is that when banks were faced with a choice between an individual or the government, they chose to lend to the government, that we know. So as that crowding out effect starts to unwind and you get credit start to trickle down to the economy, then I think you start to see banks wanting to lend. Now, it's not going to be immediate. It'll probably take a year, it might take 2 years. We think that the two large banks, Equity and KCB, are probably well positioned for that. I can't speak for some of the smaller banks who have smaller bond portfolios. But I think immediately we'll start to see some easing because now a bank can price a risk, so a bank can decide whether they want to take on that risk or not. Now, for the trickle down for the economy, it's great because you've had importers complaining, you've had a lot of businesses complaining, you've had individuals pinched, you've had individuals pushed out to where they're paying 47 instead of, say, a mid-teen number for interest rate. So I think you should see a nice pickup in the economy, and hopefully we get a stimulus from the central bank via a cut in the base rate. And then also this should ease our negotiations with the IMF. As you know, those have been slightly tenuous, in a tenuous position. And as we negotiate that, and if we do get the deal done, that also helps the shilling as well, which has depreciated somewhat over the year. So I think once credit is flowing, once the deal with the IMF is done, once there's confidence in the economy, then people will start spending, people will start getting credit, and you'll start to see those trickle-down effects everywhere.
All right, thank you for those insights.
Sure.
We had Muathi Kilonzo in studio with us tonight.